Warren Buffett's Berkshire Hathaway has been buying a secret stock and kept it a secret for more than 2 quarters, about 8 months worth. Now, a major investment fund can request the SEC withhold the name of a new buy in a fund's 13F quarterly report, since disclosing the position could reveal an ongoing buying program and therefore influence the stock price. So yes, Warren Buffett wanted to complete his position of this secret stock at a good valuation before revealing it to the public, ensuring its price did not skyrocket. Many investors love to follow exactly what Warren Buffett does, so it most likely would inflate the valuation of the stock he found before he could complete his position. So this does seem fair to me. Think of it as if you found a stock at a good price and wanted to buy it over the next month. So let's say a $10,000 position and the stock you're buying is at $20 per share. This is due to your research and analysis, and determining the value the stock is at now is creating a great buy. Now imagine you have to reveal what you are buying after you purchase $100 worth. Remember, you want a $10,000 position. And due to a large following, millions of followers, others start to buy this stock and they inflate it from $20 to $25 per share and then eventually $30 per share. So over the course of the month, you planned on buying this stock. Now, instead of, let's say, a $20 average, you now have a $25 average with this stock, which is a 25% increase because you disclosed this buying program, and no longer is it the great buy you were wanting. I do think it is fair to allow a fund's buying program to be kept a secret until it is completed, as I know none of you would want to find a stock and reveal that stock if it resulted in a meaningful increase. So the secret stock Warren Buffett has started a position in and was buying for 8 months is Chubb Limited. The ticker is CB, and it's an insurance company. When this information was released on May 15th, you will see what happened to the stock. It jumped over 8% in 2 days. This is the effect Warren Buffett wanted to avoid, and he did. Chubb, in fact, is up over 33% over the last year, so it has performed very well. So why did Warren Buffett buy this insurance company, and should you? First of all, let's talk about this. The first reason is we're seeing a favorable environment for insurers. Insurance companies have been able to raise their premium rates substantially as the market hardened for multiple years in a row. With years of increased environmental catastrophes such as hurricanes, floods, fires, also with increased economic inflation, so think of higher expenses and replacement costs for the insurance company. Also, there's been an increase in social inflation. This is the trend of increasing lawsuits against insurers as well as more expensive judgments against insurance companies. This caused investors to flee these type of investments. Also, with these tight conditions, several players in the market left, allowing the remaining insurers being able to raise rates aggressively. This has led to increasing profits. In fact, last quarter, Chubb's profits increased 20.3% and improved its combined ratio to 86%, which I see most insurance companies above 90%, so to be below that is so impressive. And I'm going to talk more about what the combined ratio is in just a minute. Now, the next reason Warren Buffett bought is due to valuation. That's what he's all about. He's a value investor at heart, which insurance companies are trading low right now. Chubb is trading at 12 times earnings, with many peers even cheaper in the single-digit PE ratios. So that's definitely attractive for him. Then there's the brand of Chubb. The brand is so important. It's something that I use on my quality checklist. That's one thing that has to be checked off. And that, to me, if it's a good brand, a quality brand, that creates staying power. And Chubb is considered a premium brand and can command pricing power. Chubb is known to be very fair and lenient with claims, striving to make customers whole as quickly as possible without jumping through many hoops. Chubb has a masterpiece homeowners insurance product that is very popular with wealthy Americans. So the brand is there, and I believe Warren Buffett loves that. And then there's the fact that Warren Buffett likes insurance companies in general and has decades of experience with insurance companies, so it fits and gives me, as an observer, confidence in this choice of his. Now, there is a rumor going around that Warren Buffett sold off some of his Apple shares, which I'm sure you all heard about, in order to buy Chubb, the company, the insurance company. So we shall see if this happens, but I would not be surprised if it does. He does like to do this. Now let's look at the financials of Chubb, because we need to also look at this to see how strong this company is financially. So the first chart here is total policy income. What this is basically are the premiums that this insurance company charges. So the premiums coming in, they're increasing over time. That is a great thing to see. That is that pricing power that we are seeing in effect. Then we're going to look at net investment income. Now, a lot of people don't know this, but with insurance companies, one way they make money is by investing, and many insurance companies have huge investment portfolios. So this is all the interest and dividends earned from their investments, and we'll see here it is going up over time, which it should, because the rates right now are high, so they should be making a lot through interest and dividends. Next up, we're going to look at total policy expense. This is basically the losses paid out on claims. And yes, this is going up, but that is expected as a lot of costs around medical or the replacement costs for different properties that get damaged is going up, but they seem to be managing it pretty well. It actually went down from last quarter. Then we're going to look at underwriting and other expenses. This is the admin expenses such as salaries and other costs involved in managing these policies. So yes, this is going up as well because, like everything, including salaries, they are increasing, and this is just showing that effect, but they are keeping it under control. And again, it actually went down slightly from last quarter. Then we're going to look at net income. So this is basically the premiums, and you're going to subtract out the losses and the expenses, and you're going to also put back in that investment income, amongst other things. But this is going up, and it jumped up massively last quarter. So they're really able to grow those premiums and keep the losses and expenses under control. That is a great sign for an insurance company that they are performing very well and managing things very well, for that matter. Now the combined ratio. So what this is it's the premiums minus the losses and expenses in a percentage, in a ratio. So like we said, Chubb has recently about an 85% combined ratio. What that means is for every dollar of premium coming in, they're paying out 85 cents in losses and expenses. Now you need to know with insurance companies, it's very common for this combined ratio to be above 100%, which means for every dollar premium coming in, they're paying out more in losses and expenses. But to offset that, like we said, they should have their gigantic investment portfolio bringing in that interest and dividends. So the fact that this company's holding below 90% on average is incredible. That's rare to see with insurance companies. And so yes, the combined ratio is very important. Anything below 100 is very good, but don't be concerned if you see something above 100, because that is common in the insurance industry world, and that's where you look at other things like their investment income. Then we'll look at the senior debt, and we'll see here that overall they're maintaining this. It's pretty flat, especially from 8 quarters ago, and this makes me happy. So overall, a financially healthy insurance company that has outperforming metrics compared to a lot of other insurance companies. So I can see why Warren Buffett is attracted to Chubb as an investment. So we know why Warren Buffett bought this value play. That's what he does, but should you buy it? My opinion is that insurance companies can be very profitable. Insurance is a necessity these days, and that ain't going anywhere anytime soon. In fact, their importance over time will only grow and grow, as unfortunately health issues are only seeming to increase, natural disasters are on the rise, and there is insurance for just about anything out there. So this is going to be a huge part of the future, even bigger than it is today. Unfortunately, but fortunately, it depends on how you look at it. So what you want to look for is a company that can control and manage their losses and expenses. This is an indicator of a company that underwrites good policies and has good practices to make the insured whole faster, which reduces expenses in the end because it's not some long drawn out claim. Now, you have heard of insurance companies dropping high risk areas such as fire zones in California. So it's all about the risks an insurance company is willing to take, and that shows up in their losses. And we saw Chubb is managing those very well. Of course, pricing power and the ability to increase premiums year after year is a good indication of a company that offers a quality product and retains its insurers. So yes, I think an insurance company is a great addition to anyone's portfolio should it fit the qualities of a company like Chubb. And yes, I would say Chubb looks to be a great investment and one that I will put on my watch list. And now may be the time to add during attractive valuations. Just know insurance companies may not be the big tech gainers we see, the exciting, sexy investments, but they will provide solid, attractive growth should you choose a quality one. And again, Chubb over the last year is up over 33%. That's really good. So let me know if you invest in any insurance companies and which ones, because I think this is a good time to share that with each other. I currently don't have any insurance companies in my portfolio. I've been looking for one for a long time, and to be honest, I kind of forgot about it. So I need to put it back on my radar because I think it is a great industry to be in for investing. So with that said, here is my portfolio. I share this with every single video. Right now, I'm up 21.37%. And over the past couple months, I've been hovering in the 20 to 22% range. So some of my sectors here in my portfolio may go up while others go down. It's kind of balancing each other out. But overall, if you have any questions on this portfolio, let me know. I'd be happy to discuss it. But that's all for today. So happy investing, and we will see you soon on Mark Arnold's Finance.